Why do some investment funds consistently outperform while others quietly disappear? Why do certain investors create massive enterprise value while others simply hope the market goes up? Most people assume the difference is capital, but after more than 2 decades building and scaling businesses, I can tell you the real difference is something far more powerful. It's operators versus passive capital. I'm Justin Kaiser, co-founder and CEO of Empire Franchising. And over the last 24 years, I've built businesses, structured equity deals, and scaled franchise platforms. Today, I help entrepreneurs turn local businesses into scalable national franchise brands. I've scaled my own franchise brand from scratch to more than 100 franchise territories before it was acquired. And one thing becomes crystal clear when you operate inside businesses instead of just investing in them. Operator-led funds almost always outperform passive capital funds. And today, I'm going to show you exactly why. Because understanding this distinction can fundamentally change how you invest, how you build companies, and how you create real long-term equity wealth. First, let's define the difference. A passive capital fund primarily deploys capital. They raise capital, allocate it into deals, and hope that the management team executes. Keyword hope. The fund itself usually doesn't operate the business. They rely on founders, managers, or external operators to drive results. Now, sometimes this works, but more often it doesn't, and it creates a misalignment of incentives and a lack of operational control. Operator-led funds are completely different. An operator-led fund doesn't just deploy capital, it installs systems, it installs leadership, it installs growth infrastructure. It also installs accountability. And in many cases, the operator is the one that actually is creating the value from inside the business. This distinction may sound subtle, but it's the difference between financial engineering and operational engineering. And operational engineering is where the real value gets created. Let me give you a simple framework. Value in business is created through 5 primary levers: revenue growth, margin expansion, scalability, systemization, and strategic positioning. Passive capital funds typically influence these indirectly. Operator-led funds, on the other hand, influence them directly. When an operator invests capital into a business, they're not simply writing a check. They're installing the playbook that produced results before. They're bringing framework, processes, marketing systems, leadership structures, and strategic experience. They know exactly where the bottlenecks are going to appear because they have already solved them multiple times. Think about it this way. If you invest in a restaurant and you've never built a restaurant system before, you're guessing. If you invest in a franchisor and you've never scaled franchises before, you're guessing. But if you've built the machine before, you know exactly what levers to pull, and that dramatically changes the probability of success. This is one of the reasons why private equity firms increasingly seek operators rather than purely money managers. They want people who understand the mechanics of building value inside a company. Because spreadsheets don't grow companies, systems grow companies. Now in franchising, this principle becomes even more obvious. Franchising is not just about selling franchise units, it's about building a repeatable growth engine. Brand positioning, franchise development, marketing systems, territory strategy, operational playbooks, franchisee onboarding, and support infrastructure. When we scaled Solar Grids past 100 franchise territories, the reason that we were able to grow so quickly wasn't because of capital. We actually were completely self-funded without any outside investors. It was because we installed systems that allowed the model to replicate. Now, in general, capital helps. That's why we're doing it. But systems multiply capital. That, in essence, operator-led investing. The operator is building the machine that produces results. Passive capital funds often rely on founders who may or may not understand how to scale. Now, sometimes they do. Sometimes they don't, though. And when they don't, the fund becomes reactive instead of proactive. Operator-led funds, however, eliminate that uncertainty because the operating system and the operating expertise already exists within the investment structure. Now, let's talk about scalability, because scalability is where the real wealth is created. If you look at the largest enterprise value outcomes in business, they rarely come from isolated investments. They come from platforms. Platforms allow one system to support many assets, and franchising is a perfect example. When you build a franchisor correctly, you're not just building one business, you're building a growth platform that can replicate across hundreds of locations. Each new location increases brand value, increases royalty streams, increases enterprise valuation. Operator-led funds understand this because operators think in systems. They think in platforms. They think in repeatable growth engines. Passive investors often think in deals. Operators think in machines. Deals are finite, machines are infinite. And the investors who build machines create exponentially more value. Another advantage that operator-led funds have is alignment, because operators typically have their reputation and track record tied directly to the outcome. They're not simply managing a portfolio, they're building it, and that creates completely different levels of accountability. When you're responsible for installing the growth infrastructure, running the strategy, and delivering the outcome, you approach investments differently. You analyze risk differently. You structure equity differently. You design incentives differently. You focus on the long-term enterprise value rather than short-term returns. This is why some of the most successful investors in history were operators first. They built companies. Then they invested using the lessons they learned while building them. That's what we're doing here. Because operating experience creates pattern recognition, and pattern recognition dramatically improves decision-making. Another important factor is speed. Operator-led funds move faster because they already know the path. When a company needs to scale marketing, they know the framework. When a company needs to improve margins, they know the levers. When a company needs to expand nationally, they know the playbook. Passive capital funds often need consultants, advisors, and external operators to figure out what to do next. That slows down execution and introduces complexity. Operators remove that friction because they already understand the growth architecture. Now, let's talk about ownership structure, because this is where many investors misunderstand how value is created. Many passive investors focus on owning small pieces of many deals, but operators often focus on owning meaningful positions in platforms that can scale dramatically. In franchising, platform ownership is incredibly powerful because the franchisor earns royalties from every unit in the system, meaning the value compounds as the network grows. This is why the franchisor is often the most valuable entity in the entire ecosystem. Operator-led funds understand this dynamic. They prioritize ownership in the platform layer rather than just individual locations or isolated assets. This allows them to participate in the entire growth curve of the system, not just rely on early stage revenue. Platform ownership is where exponential valuation is created because the platform controls the brand, the systems, the licensing rights, and the growth engine. That's one of the many reasons that we focus heavily on platform level thinking. When you build the infrastructure that allows businesses to scale through franchising, you're not just investing in companies, you're building a network of growth engines. And the value of that network compounds over time. Now, none of this means passive capital has no role. Capital is essential, but capital without operational capability often struggles to produce consistent results. The best outcomes usually occur when capital and operational expertise are aligned with the same structure. Operator-led funds combine both. They bring capital, but they also bring the operational blueprint required to transform that capital into scalable enterprise value. And that is the fundamental reason that operator-led funds outperform. They don't just invest in businesses, they build them. They install the systems that create predictable growth. They design the incentives that align stakeholders, and they structure ownership in ways that maximize long-term value creation. If you're an investor evaluating opportunities, ask yourself a simple question. Is this fund simply allocating capital, or is it installing the operational engine that will drive the results? That question alone will tell you more about the probability of success than almost anything else. Because at the end of the day, money is abundant, but operators who know how to build scalable systems are rare. And the investors who partner with those operators are usually the ones who win. If you want to learn more about how operator-led platforms are transforming the franchising industry and how scalable business systems create long-term enterprise value, then visit empirefranchising.com. We share our insights, strategies, and frameworks designed to help entrepreneurs and investors build scalable businesses and ownership platforms. If you found this video valuable, make sure you subscribe, because we're going to continue to break down the real mechanics of building companies, scaling systems, and creating equity wealth. I'll see you in the next video.